Welcome back to the Mining Pod. On this week's show, we're joined by Adam Sullivan, CEO of Core Scientific. We recorded the show live at the North American Blockchain Summit down in Fort Worth, Texas last week. So please excuse a little bit of the background ambient noise throughout the podcast. We had a great conversation with Adam talking about their exit from Chapter 11 bankruptcy and what the future holds for Core Scientific, one of the largest Bitcoin miners in North America. But first, a word from our sponsors. Did you know that you can make more money by merge mining other networks? Check out makemoremoneymining.com for information on BIPs 300 and 301, a proposal to bring more revenue to Bitcoin miners through sidechains and merge mining called drive chains. Increase your mining revenues and learn more about participating in Bitcoin governance by visiting makemoremoneymining.com. Are you a miner who wants to activate Bitcoin improvements? Check out Activation.Watch. See what Bitcoin improvements the Bitcoin community, developers, and miners are considering, and show support by signaling for one of many BIPs up for consideration. Activation.Watch. Is your mining operation happening ready? Take control of your own future with the right energy strategy. Lincoin Energy Trading Platform is a tool used by miners to design, monitor, and seamlessly orchestrate sophisticated energy strategies within electricity markets such as ERCOT, New York, and PJM. Avoid penalties, participate in demand response programs, and capture hundreds of thousands of dollars per megawatt per year by deploying the right block and index strategy. Secure your competitive edge at lincoin.com. Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Adam, welcome to the Mining Pod. This has been a long time coming. I've had one, maybe half a version of someone from Core Scientific on the show.
Okay.
So it's about time I get somebody. And I got the top to start, so that's what you want. How you doing?
I'm doing really well. Okay. How are you doing?
Good. I'm not quite exhausted yet from being here, but I'm wearing a suit, which is different from last year.
It's impressive. Yeah.
Thank you. I know. I got a text. Someone sent me a text and was like, "You're not a boomer and you're wearing a suit. I'm really proud of you." So I am kind of proud. But that wraps us into what's going on here with this Core Scientific outfit.
Yep.
We went on the tour yesterday, and you guys were, I said stormtroopers.
Yes, stormtroopers. We've heard a number of different things. Penguins. The Stormtroopers one, though, is the best one by far. So
it is.
I'm really happy that you came up with that.
Did that get instituted recently, or is that like a long-standing policy?
I came from the investment banking industry, so vests are a necessity in that industry. They protect our core, and so
keep your arms mobile.
Yeah, you got to be able to catch a football and also look professional. So, it's been a great outfit for instituting at the data center. So we're really happy with it.
The only thing I have to call out is the technicians were wearing different core swag. Are they like on a lower rung, or is that just like they need more mobility?
They need more mobility. They're carrying miners around.
Okay.
Lifting heavy weights isn't advised in vests, and so they have to be a bit more mobile. They're wearing dry fit shirts, so it's really important for them to be able to have that mobility.
Yeah. Just to be clear to the audience, like you guys still take care of them. Like they're still wearing the core swag, so that's good.
Everyone in our data centers, every employee has received swag. It's a good sense of camaraderie when we're in the data centers to have everyone wearing the same gear.
Yeah. I feel swag is important, and not to belabor this topic, but when I was at Compass, I got a core hoodie, or a Compass hoodie. It did not do me justice for the work I put in there. So, Thomas, Paul, if you're listening to this, we got to work on the merch game.
Yeah,
okay.
The merch game's important.
It is.
I wear Core Scientific gear every single day. So
every day,
even Saturdays and Sundays, I have hoodies, I have T-shirts.
Okay.
Always in the gear.
That's respectful.
It's important. And I got some gear today.
The mining pod.
It's important.
And he's drinking out of it straight from the factory. So impressive to him. Okay, we have a lot to discuss, so let's get into it. Core Scientific, as of this time last year, was the biggest Bitcoin miner by hash rate, by production, whatever metric you want to use. A year later, you guys are coming out of restructuring. Mm-hmm. You guys are still one of the top Bitcoin miners out there, and there's been a lot going on. Let's do the bio first, because you have to do it. How you got into your position as CEO of Core Scientific, maybe a little background there as well.
Yeah, of course. So I spent the last decade in the financial services industry, most recently running an investment banking team, actually focused on this space in particular. Our team was really focused on M&A, on strategy development, and on capital raising. We had the opportunity to work with many of the companies in the industry, And so when Core Scientific was looking at bringing in some new blood, my vision for this company aligned well with what the board was looking for. And so, I'm really thankful to this board giving me the opportunity to lead this company. The way I think about Bitcoin mining has been a little bit different than a lot of people have been thinking about it historically. You can use Core as a bit of a case study for how to think about Bitcoin mining on a longer term basis. Historically everyone was so hyper-focused on what's your growth in the next 6 months, next year, how many megawatts are you building, how many machines are you bringing online. It forced a lot of bad habits into companies. You put that alongside of a treasury management that is mainly focused on Bitcoin. And then when you have hiccups in the market, which this market has volatility every single year, we go through a cycle, it puts you in a really precarious situation. And so for us, it's a focus on free cash flow, a focus on consistent development, not tackling anything too major that restricts our balance sheet. And so, the existing board and me really saw eye to eye on that, and so we were able to come to an agreement, and I couldn't be happier to be part of Core Scientific.
Love it. Okay, so beforehand you were working in the banking space on
Yep.
MMA deals, and then you're roped into working at Core Scientific. What's that journey been like for you from Bitcoin mining into Core?
I spent a lot of time with Bitcoin miners in my previous job, so it felt really natural for me. The problems that many of the companies face in their development and their growth, we worked with a lot of companies through that process, especially going from what was essentially pre-2020 not institutional level Bitcoin mining, to today where if you're not building 50, 100, 150 megawatt sites at a time, it kind of looks subscale. And so I went through those challenges, those adversities with a lot of these companies. And so for me coming into Core, it felt really natural to have the scale. And the team that I'm surrounded by is absolutely incredible. I want to come here if I didn't think the team could absolutely soldier through all of the problems that we were currently going through. We have a rock star operations team, a rock star tech team, a rock star finance team. I'm really excited about being able to work with all of them. Without all of those pillars inside the company, it would have been much more difficult for me to step into this company and make as much change as we have over the past 7 months.
Love it. Okay, let's take a step back and talk about the tour yesterday.
Yeah.
Which was lovely. So we're down here at the North American Blockchain Summit, enjoying the best of Fort Worth. And yesterday we got to go out to Denton, Texas, and Denton, right? Not Dalton?
Denton. Yep.
Okay.
Denton.
You guys also have the Dalton sites?
Georgia. That's Georgia. Yeah.
Messing me up. The Denton, Texas sites, and we got to go on a core tour. We saw your guys' strategy from energy perspective, an IT perspective, and a repair perspective. And then we got to go through the hot and cold aisles of one of your cathedral models.
Yep.
So that was pretty cool. Also seemed like you guys are opening up like a little bit more and like coming out of like this Chapter 11 restructuring process, like new brand, new face, new suits. So it's a whole thing going on there. Tell me a little bit about that. And I mean, from my perspective, the tour was awesome, and I've been to a lot of sites, so it's nothing there,
Yeah, no, we appreciate that. Our big focus, especially as we come towards emergence, but also post-emergence, is a lot more focus on transparency. And historically, we've never talked about the technology that we've built. We never talked about our facilities. We hosted tours for hosting clients. We obviously have a large hosting business as well. And we wanted to provide people with the right information to evaluate us as a company. Historically, people didn't even know that we were one of the first companies to actually build our own fleet management software. We had to solve these issues ourselves because we were the first institutional scale Bitcoin miner. First to 100 megawatts, first to 250, first to 500, first to 750. And so we had to build all of these tools for ourselves because no one else needed those tools. And we didn't know how long it was going to take before other people needed those tools, so we couldn't wait. But the tour yesterday was absolutely incredible. And we had 100 people out there. We had a research analyst day. We actually did a full presentation to kick off the morning with those research analysts, as well as it was webcast. But for us, we were kind of open kimono that entire day, and a number of people came up and said, this is really refreshing. We get to see the dashboard that your operations team looks at. No one else in this industry would show us the number of machines that are down in this facility right now. Those are all things that we're proud of because we look at them every single day, and we're hyper focused on continuing to execute on this business. But if no one knows about how you're executing, if no one knows what your advantage is in this industry, it's like how are we different than anyone else then? I mean, the answer is a lot's different, but no one knew because we never spoke up.
Yeah. No, like I said, I've been to a lot of different facilities, seen different ways of doing it, seen some hilarious ways. It's my favorite. But I've also seen some good ways, and you guys are like up there in the pecking order for sure. Okay, so we're gonna move past that and just talk about obviously the stuff that's been in the headlines recently.
Yep.
Restructuring and coming out of that restructuring process. That's why they brought you in, and you guys are accomplishing that. Let's back up the truck and understand like how you guys got to that. What happened in 2020, 2021 that got you guys to the position you need to be there?
Yeah.
Just the quick recap for the audience that's not familiar. And then let's spend a little more time on this past year and what you guys have been doing to restructure.
Yeah, absolutely. I mean, I think it's helpful to go back to middle of 2020. As Bitcoin started to rally coming out of what I would call the doldrums of COVID, we saw capital become readily available for all Bitcoin miners, not only public miners, but also private miners. There was this hyper growth focus on how many miners are you installing, how much infrastructure are you building, and Core was definitely a part of that. We were hyper focused on growing. We had a goal to get to a gigawatt, and we wanted to execute on that as quickly as possible. So, you fast forward to 2022, when at the end of Q2 in 2022, capital started to dry up for our industry. And we had just become public at the time, and we were under construction on multiple sites. Putting up a site is not easy. It's 12 to 24 months at bare minimum, put up all the high voltage. There's a lot of costs, and there's a lot of delay between the first dollar into a site and the first dollar out. We'd also spent over $1 billion on machines, and so we had a significant number of capital expenditures not only going on, but also planned going forward. We also had a Bitcoin treasury, exceeded $500 million, and we were taking out debt in order to pay for all of those build-outs, all of those machine purchases. The company kind of would have been cleansed of a lot of that if Bitcoin performed really well. Unfortunately, in Q3, Bitcoin started to trade down, power prices started to tick up, and when you have a significant balance sheet denominated in US dollars, when your main commodity that you're mining goes down and your input costs go up, there's this compression. It created a cash flow issue. So that's really what took us there in 2022. We're working to solve a lot of those things. All going through this restructuring process, cleaning up our balance sheet. 2024 is going to look a lot different from us. The business plan that we put out, there's actually a new version of the business plan that was put out just a few days ago, but it kind of walks through a much more measured growth plan. The good news is, we have 372 megawatts of partially developed infrastructure. The average dollar per megawatt is $200,000 to build out each additional megawatt from here. All of those things create a much more, I would call it optional company. We have a lot more optionality. And so for us, it looks like a much more attractive go-forward plan, more moderate growth, funding all of this CapEx out of free cash flow. All of those things are really important to create a sustainable Bitcoin mining company.
Restructuring plan.
Yeah.
You probably know that forwards and backwards, or at least
yes.
I'm assuming you do.
Yes.
Let's go through it.
Yeah, of course. So, we went into bankruptcy with just over $1 billion in debt. We've had the opportunity throughout this process to restructure a significant amount of that debt. So, kind of broad strokes, the convertible notes, which represented about $700 million in debt going into bankruptcy. They are taking 3 securities. They're taking equity as part of our emergence. They're taking a new convertible note. They're taking a term loan. So that provides us with relief of a bit of that $700 million. Then we have the miner equipment debt. That's another. It's sub $200 million, but that is a haircut on what their initial total value was, and then we have some other debt. It's smaller associated debt with a company. So we're looking to emerge with about $722 million in debt. The nice part about the plan is we had to protect the upside for the equity holders and the downside for the secured note holders. And so our plan really structures around that. And so there's debt associated with what the convertibles are receiving, and then the upside for the equity. They're protected by 2 separate warrants. There's a tranche 1 warrant at $1.875 billion, and a tranche 2 warrant at $2.5 billion TEV. That's total enterprise value. And so, it provides a unique incentive for equity holders. When we look forward, it's a really interesting opportunity for them to receive a lot of the benefit of, Bitcoin increasing, all of these, economics improving in a way that also protects the downside for the converts.
Gotcha. Now, you guys also did a few things during this last year to protect that upside. So recently at the Bitmain order, they took equity in Core Scientific, and you guys got future orders for machines. Tell me a little bit about that process and how you guys are thinking about still making moves as a mining company while going through a restructuring plan.
Yeah, so the Bitmain deal is actually, so it's for or at emergence. So they're taking a $54 million investment in Core at emergence. That was a unique opportunity. Bitmain's been a great partner for us for, over 5 years. We're really thankful to them for taking that opportunity to invest in us and believing in us to make that type of investment. On a go-forward basis, that's definitely an interesting model, is using equity for machines. I think for us, to minimize dilution on that front, it's something that could be used opportunistically, but on a go-forward basis, we're really focused on utilizing cash to pay for machines out of free cash flow.
Okay. I mean, that deal was interesting because I think a lot of people looked at it and were like wondering who got the better angle there. And I had people reach out to me personally just to ask for an opinion on it, which I don't know why, because I'm not an M&A dealer or whatever, but people are interested in it. And on Bitmain's side, like, you get equity in the largest Bitcoin miner by exahash, or what will be, again, once you guys kind of retake an edge. And on the flip side, you guys get optionality in the machines and have like a little protection there. When you guys are going through these deals, like, certainly there's many other deals you guys could take.
Mm-hmm.
What makes you pull a trigger on something like this? Like, what are like sort of the guiding stars you're looking for in these deals?
Yeah, I mean, one of the big things is, who do you want to work with long term? Who do you want to partner with? I think this industry is as much about who do you want to work with versus who do you not want to work with. Bitmain's been a great partner to us. We're one of their largest hosting partners. And for us, we're thinking about this industry now on a 5-year, 10-year basis. We know Bitmain's going to continue to be a market leader on the manufacturing side, and this really brings both of our companies a lot closer together. It's a unique opportunity, as you mentioned. There's numerous opportunities that were out there, but to partner with the largest manufacturer is really unique. And a $54 million investment, that's a big investment. That's a big vote of confidence out of Bitmain. And so, we're really proud of being able to structure something like this with them. Coming out of emergence, all deals are complex. And so, it's not just saying we're going to invest $54 million. It's also saying, we're willing to commit the time to structure this investment so it's acceptable to all the parties in the bankruptcy process. And so, they've definitely spent a lot of time with us on this investment. And it's been great to have someone like that that's willing to step up to the plate and actually battle through a lot of issues that you have naturally coming out of a Chapter 11 process.
To me, the notable thing about what happened with the Bitmain deal and Core Sci is that there's partners of that size able to help each other out. Mm-hmm. We've seen that in some other markets where there's like larger players able to help each other out. And I'm wondering if you've ever reflected on that, the fact that we do have companies that are this big now, and like the Bitcoin market is getting this large to be able to help each other out.
Yeah, I mean, it comes up, especially relevant being out here in the Texas Blockchain Council Summit here. There's a lot of discussion around political campaigns, around how Bitcoin miners can work together on these types of campaigns. You reflect back to 2019, 2018 in this industry. There were no large mining companies. There was there was less than a handful of public mining companies at the time. These weren't big corporations. They had maybe one site, kind of subscale. Now you look at our companies. Like Core Scientific, we produced $360 million in revenue through the first 9 months of this year. We're real businesses today. Yeah. And we're meaningful into the market. Not just on the political side, but across the board. There are companies that have spun up around miners, mining servicing companies. They're attracting large investments, and it's been great to see, because you're absolutely right. There is a good contingent of some of the original companies that were in this industry that have all kind of banded together to make sure that we're working together to help each other through tough times. Yeah. And we've had a number of partners reach out to us throughout this process to help us on a number of different things, and it's really refreshing, because this industry, when it first started, the mining industry in particular, it was kind of cutthroat. There was, people didn't really want to help each other out. Everyone was pretty quiet. There were some people that worked together, but oftentimes people would say, "Oh, you're new. We don't want to work with you," or it's like, "Oh, learn a bit, and then we'll talk to you again." But now it's like a bunch of people have been in the trenches together for years, and it feels a lot more, or it feels like there's a lot more camaraderie in this industry than there's ever been.
Okay, let's go over to the energy side of things. In the tour yesterday, it's huge, right? It's kind of crazy, and looking at all the other sites you guys are operating in, and just megawatts of power, and you guys are moving towards gigawatts. On the energy side, as you've been moving into that, what's been the most interesting thing to you, coming from an M&A and a financial background? What's been the most interesting to you? And then what is Core's vision for working with the energy markets?
Yeah, so we've been working really closely with all the energy companies, obviously throughout this process, and especially going into Chapter 11, it brought us even closer to the energy companies. But as part of that, it's given us a unique opportunity to work on a number of different programs with a number of our utilities that they didn't necessarily have as part of their portfolio of programs. We're really unique in the sense that we built out a lot of capabilities on the energy management side for places like Texas, where response times are measured in sub 5 minutes, and we built capabilities out to be measured in seconds instead of minutes. That's allowed us to go into many other jurisdictions where we currently operate and say, we can respond in 30 seconds, we can respond in a minute. You tell us how that helps you, and let's work through a program that can actually be beneficial to both parties. So we've been working on structuring some of those. We're in five different states, so we're in a number of different power markets, and walking into a meeting like that, it has been so unique to have them say, wait, how quickly can you respond? Bringing 100 megawatts back onto the grid in 2 minutes, you can do that? And it's like, yes, that's exactly what we can do. Those are the unique opportunities that get me really excited. On the M&A side, I would say, if you remember back to, I believe it was 2021, everyone said that energy companies were going to buy Bitcoin mining companies. We never saw that play out. There was that narrative back in 2019 as well that, every natural gas plant is going to have Bitcoin mining next to it. I don't think that narrative is going to come to be. I think that's a worn out narrative at this point.
Busted, huh?
Yeah, it's a busted narrative. Mythbusters, busted. Yeah. And so, maybe we'll see it going forward, but, we've never seen that come to fruition, and I don't think we're necessarily going to.
So it's all grid at this point? It's all grid?
A lot of it's going to be grid. Some of it will be behind the meter. But, I just don't think we're going to see that blockbuster trade that everyone was hoping for.
It's kind of a bummer. I like the smaller miners working on flare stuff. It's cool. I like to see more of that built out. But for you guys, what's the longer term play here? Is this focusing on those 5 sites, building those out? We saw it yesterday in the tour, you guys talking about all the additional infrastructure you already have in place, transformers, buildings, you have some of the power agreements already in place. Is it focusing on that for the next run? What's the past that? What's the next step past that?
Yeah, absolutely. So we have 724 megawatts operational today. We have 372 megawatts partially developed. Those 372 megawatts are located in Texas between our Denton site that we toured yesterday and our Cottonwood site out in Pecos. That infrastructure, as you saw from the photos, the buildings are there for many of these buildings, for much of that build out. We have all of the high voltage there. We have a lot of the electrical infrastructure there. That alone would take us up to 1.11 gigs of power. We have another site located in Oklahoma, has another 500 megawatts of power. And so, there's a lot of opportunity inside of our portfolio, a lot of optionality. That's probably what we're most excited about, is just the broad optionality we have across our portfolio. We have a much more measured growth plan going forward. So that 372 megawatts being developed over the course of the next 4 years, it's obviously all dependent on how our capital structure evolves over time. I think for us, we're really hyper-focused right now on emergence, and once we emerge, working to pay down our debt. That will provide us a lot more optionality. Once we're actually able to pay down that debt, remove a lot of the credit risk out of a company that has debt, and really be able to capitalize on opportunities then in volatility. Whether it's M&A, whether it's just additional build-outs or sites, you can't do all of that without paying down your debt and getting a freed up capital structure. And so, that's going to be a huge focus for us over any additional build-outs outside of what's currently contemplated.
Would you guys think about selling assets at all to pay off that debt, or are you guys focused on building it out, whatever, forever next to get that cash flow going?
we're really comfortable with the facilities that we have today. We did just close our Celsius transaction. So we had a second site in West Texas. It was our Cedar Vale site. And so that actually reduced or took away over 300 million in claims from Celsius. We received 14 million cash as part of that. And Celsius received our Cedar Vale site. That's pretty much the extent of what we're looking at in terms of any adjustments to our facility mix. Having 7 facilities across 5 states, it provides us a lot of unique advantages to other Bitcoin miners who are operating in one facility. So we've actually been able to optimize our machines throughout all of our sites, which is something that other miners can't do. Every site has its own power programs, has its own amount of intermittency, it has its own kind of temperature and climate. And so for us, we've hosted over 700,000 machines in our sites. We've been able to collect a lot of data points across all those machines, and we've been able to move our machines in between each of our sites to ensure that we can maximize profitability out of those machines. That's completely unique for us, and so we're really looking at maintaining those sites, continuing to improve them, and looking at incremental, I would say, changes to those sites just to produce a more efficient site.
Gotcha. Okay, one other thing on the tour that was interesting was talk about AI, HPC, all that stuff.
Yeah.
Mostly you guys were talking about HPC. I don't think I even heard AI mentioned, but generally a lot of people are speaking about that. How can we bring high-performance compute into Bitcoin mining? There's a lot of ideas out there, and the execution's not there quite yet. We're seeing people tinkering with it. Iris Energy purchased some NVIDIA machines to play around with. Hut has been talking about that quite a bit. And I hadn't recently, until recently, heard Core getting into it. Tell us a little bit about that play and how it could possibly work within the strategy you guys are pursuing.
Yeah, so we've had a 6 megawatt DGX ready data center since 2018. We hosted GPUs in that facility. Those GPUs initially were used for ETH mining, and it was used for AI and other types of HPC applications. Those were not our machines. We were hosting them for a client. We've been approached by a number of different counterparties over the course of the past year to look at developing that type of infrastructure. The biggest constraint in that industry right now is power, and being co-located near enough to a city that has fiber connections. Our sites have that type of infrastructure. And so we're constantly evaluating all the different opportunities that come at us. We don't have anything to announce today in terms of what the optionality looks like, but it's definitely something that we're going to look at going forward with a lot closer eye, just because we have a lot of experience in the traditional data center space. Our COO came from Equinix. He was a former data center part of the management team for the data center team at HP. Our entire operations team at this point is mainly ex-data center people. A lot of other people don't have that type of talent internally, where we brought in only data center people to run our facilities. It provided us a unique advantage of actually having people that understand what it's like to run 50 data centers across the United States, consuming a gigawatt of power. That's what our COO did at Equinix, and so for us, we have the expertise to do it. We also know the challenges that come alongside of it. A lot of people don't understand the challenges and are just trying to throw very expensive cards inside of subscale facilities. We won't approach it that same way. So however we're going to approach it, it's going to be thoughtful, it's going to be the right way, we're going to have the right partners. It would never be done a bit haphazardly as some people have approached it so far.
Okay. As we start to wrap up here, just looking forward, the last year we've seen difficulty raise a lot, and I've just been kind of watching the Bitcoin mined per day on Core's website slowly go down, as makes sense, as difficulty goes up and there's more participants in the network. How are you guys thinking about getting back up front? Like, what's the strategy? You said earlier a gigawatt was the goal previously. What's the goal? What's the mission? What's the value here going into 2024?
Yeah, going into 2024, I would say through this entire process of Chapter 11, we've had the opportunity to go back and work on our efficiency. That's on the software side, that's on the operation side. And so we've been able to add incremental Bitcoins per month by improving our efficiency. That's been a big push for us. Obviously, this 27,000 purchase order from Bitmain, helps bring our efficiency lower, or our efficiency higher, but our joules per terahash lower. We're working through a second purchase order with them on S21s. For us, it's going to come down to how do we judge at the halving, what do we want in terms of our terahash exposure versus our efficiency exposure? that's really the play when you work towards the halving. We'll definitely see a movement higher in terms of our Terrash exposure at emerge, or by the time we get to emergence. But for us, it's if we can focus on our efficiency, if we can focus on execution, if we can focus on strong capital management, growth and being one of the biggest miners will always be there if you're good at executing. And so for us, we're just hyper-focused on all the things that go into growth, because that's how we'll be a sustainable company going forward. Without that, it's a really difficult challenge.
Okay, last question. Is the halving priced in?
To Bitcoin price? It's interesting. You look back at 2020, we saw the rally before we went to the halving, and then we went into a period of downside volatility. I don't think right now we're necessarily fully priced in for what the halving looks like, but it's also hard to know with the ETFs right now. That's kind of clouded a lot of what could potentially go on. The whole halving trade, you don't see on Twitter right now.
No, there's no one talking about it.
There's no one talking about it.
I'm bringing it back.
You're bringing it back.
I'm bringing it back.
All right. I'll repost you if you tweet about it today. So,
okay.
Yeah.
Okay.
What do you think?
Cool. I'm going to say no, because I want it to go up,
Yeah.
but it probably is. Cool. Well, Adam, thank you so much for your time today. Appreciate it. We'll have you again on the podcast, I'm sure, soon. And best of luck going through all the restructuring and closing that out.
Yeah, we appreciate it. Thanks for the time.